All right, hi everybody. Okay, so today we are going to be doing another idea gen live stream. We have had two ideas so far. Let's do a quick recap of what we found yesterday. So yeah, two companies that I quite like is actually let me move this up first. Yeah, to be analyzed. One was 8935. Another one is 7551. WEDS is kind of interesting. WEDS is essentially a Japanese wheel manufacturer. They mainly cater towards the aftermarket. So think about like JDM cars, stance cars, VIP cars, cars, young adults like bringing to car meets, for example, right? Think of Rays, NK, BBS, wheels, and then WEDS is apparently one of them. I actually have never heard of WEDS until today. I know about BBS, I know about like Rays wheels, but first time hearing about WEDS. But I did look at the design; it's quite nice. The thing about this company is that it is, they have a lot of cash. I think their earnings are quite stable. They are, yeah. Let me just type out actually what I should do for a lot of these companies is actually just place them in the tier list. So let's do a quick recap. So 7551. 7501 currently, given my level of understanding of the company, is probably a minus or B plus type of company. Requires further research. Ignore the Japanese company handbook challenge for now in terms of this company. And then the next company is Sands Holdings, 9628. Also A minus. The reason why these companies are A minus is because of just like, so WEDS is, I'll just do a quick recap. So 644 yen per share, has a decent dividend yield. Okay, trades at 0.56 times price to book. Okay, the reason why it trades low is because it just has a low margin, profitability wise. It's pretty low margin, but it seems like the revenue consistently increases. And the thing I like about this company, which I need to do more research on, is essentially is that the company, there's a parent company that owns 38% of shares. It's Chuo Seiki. This was so essentially Chuo Seiki is a OEM manufacturer of wheels. So think Nissan, think of Toyota. Primarily Toyota. Toyota actually owns 50% of Chuo Seiki. Okay, and so was it 50% or 70%? Something along those lines. So Toyota actually has a huge stake. No, 70%. Yeah, Toyota owns like 70% of Chuo Seiki, and Chuo Seiki owns 38% of WEDS. Okay, so essentially before the company was one company, um, it was an OEM manufacturer and an aftermarket wheels manufacturer, and what they did was they spun off WEDS into its own company and focused primarily on aftermarkets. This is probably because WEDS being aftermarket probably has higher margins than an OEM wheel manufacturer, but then these actually look kind of low. But I don't know what their EBIT margins might have been like. But the thing that I like about that is because I know from looking at certain companies, like let's say dealership page, right? When you buy a vehicle, you're able to not just use the OEM manufacturer standard wheels, you can also upgrade the wheels to different wheels. You're allowed to do that. And I've seen Rays before. For example, Nissan GTR uses Rays, right? And so the nice thing about having that relationship with Toyota basically means that there could be certain cars in the Toyota lineup where you could insert some WEDS, wheels inside, right? So that's a plus side of that. And because Toyota does own a pretty hefty stake in the company, right? So indirectly, Shioseki owns 38% of this company, and because Toyota owns 70% of Shioseki, so it's like 70% of 38%, which is around just under 28%, right? Of this company. So it does want it to do well, right? It doesn't want it to not do well. So I think that's a good relationship to have. And trades at really low multiples, 8 times forward PE. Don't like the fact that EBIT margin dropped a little bit. Don't know why, but yeah. Um, the thing to figure out for this company is, they had a large capex in 2019, 2021. The nice thing about this wheel company is that because it caters towards the aftermarket, design is actually a huge aspect of the company, meaning like like for me personally, I can't afford to go to a track day, right? But I can afford to have like a, let's say, a GR86, right? And then put some nice set of wheels on it and make it look nice. So I think the aesthetic and the design is more important to me personally than the actual technology behind the wheel, for example, right? So you don't need to compete necessarily on technology and trying to like consistently invest in capex, but you can invest in design, coverage in terms of models, and being in different categories like people who are track oriented, people who are more of the casual and lifestyle and just want design, right? Um, yeah, and yeah, so that's basically the thesis on WEDs. And the reason why it's A minus, yeah, again, it's because of its low margins, but it does have a high dividend, a decently high dividend yield, and trades quite cheaply. So that was nice. Next one is Sand Holdings. Let me just quickly recap that company. Wait, was it FJ Next or was it Sand Holdings that I wanted? Oh, it was FJ Next. Oops, it was FJ Next. So 8935, wrong company. Um, right. So FJ Next Holdings is a company that does planning, development, sales, and brokerage of real estate properties in Japan. What I liked about the company was that they had a pretty high margin, decently high margin um, real estate management business, right? Property management business. And essentially, what happens is you have real estate development, you have construction, and essentially that fuels a funnel towards the real estate management business, right? Ideally, if that's the case, then essentially you have a very high quality, reoccurring, decently high margin um, income stream, right? And currently it's making around 1 million. So the idea for that company is that for, I guess we don't have it here. We don't have it here, but sure, I can quickly. Do I actually? Wait, hold on. Let me double check. I might have it. I just forget to put it in. Oh, I do have FJNX. I just forgot to copy and paste it over. 8935, right? 8935. Okay. Oops. I forgot to. I guess copied the wrong thing. Okay, yeah, FJNX. So I'm just change this 8935. Okay, so 8935, 1600 yen, 3.5% div yield, 0.7 times price to book, right? They do have debt, they do quite a bit, but they also have a lot of cash. Okay, they have better margins. I think it's boosted primarily from its real estate management business, but the construction business also had pretty decent margins. I think it was in around the, I think 8 to 10% range, if I remember correctly. And then they have some other smaller segments that aren't very profitable. I think their Japanese in business isn't very profitable. Might be break even. So trying to diversify and utilize cash in some method, I guess. Um, yeah, what do I like about this company? I like about this company is that real estate, pretty stable, low multiples, low enough PE, I guess. Dividend yield could be lower. So essentially the opportunity set for this one is that you can just put this in a watch list because before it was trading between 1100, 1200. So if you look at what that would do to div yield, it would be closer to 5%, 4%. 1100 would be 5.1%, if I remember correctly. Yep. And yeah, then they would trade around like 0.5 to 0.6 times book. So they would have two catalysts, which is increasing dividend, increasing buybacks. Although, if I remember correctly, I don't think they perform many buybacks. If I recall correctly, could be wrong. So yeah, it just seemed like a good alternative to cash because of how cheaply it formerly traded at. Currently it's trading at these multiples. And if we take a look at essentially the price chart, yeah, it's been on a tear. But if it were to drop down to something around these levels, then it could be a good time to get back in. And it would be a good alternative to cash, in my opinion. Yeah. Okay. So there's that part. And then, yeah, so let's continue. So I went through my initial screening. So what I need to do right now is continue screening. So my screens. Last time I think we filtered by EBIT margins. Let's see if there's any like differences, any new names that go on a list. Because usually what happens is like companies cycle in a list, right? I'll have an initial list, and then what will happen is that different companies enter and exit this list based off the criteria and whether they've gone back to fair value or not. So yeah. Automobile components. I typically don't really like automobile components because hard businesses. Those are pretty difficult businesses. But 9.66%, that's interesting. 9.66, 8.6 PE, 7.7 times. Price 0.9 times. Sun call. Did I look at Sun call yet? Let me see. Let me open another Koyfin. I have not, so I can add Sun call here. So Sun call 5985. Let's what we should do is this. We should find a few. Let's say 5. And then look at them. Arigato services 7.7, 3177. Hotel, restaurants, Univance, auto components, household durables, R planner. Interesting. Okay, I might want to look at that actually. Oh, that's a really micro cap. That's a really small company. Alright, have EBIT margin 6.22%. PE 6.6 times, 1.9 times price book. It's a really small company. Oh, this is in USD. Oh, okay, no, I prefer JPY. Okay. Okay, then our planner is not too small. I was under a different impression here. Let's see. I think we can look at that. 298, 2983. Havix Corporation. 1.2 times book. 1430. We can look at that. Oops. Nope. Not importing Jack right now. Oh, applied company. I think we looked at something. Applied 3020. Yeah, we looked at applied already. Hasegawa we looked at. Cool Holdings. Cool Holdings. PEU. Next 12 months, 48 times. Not very good. 3.2 times, 6.7 times, 0.6. Specialty retail. 9856. Doesn't look that interesting. Okay, I think I'm gonna modify criteria. See if we can do something. Oh, we have it set at consumers? Oh. Okay, let's try that. Consumer staples. I think we can do P of up to 10 times, that's fine. Ifuji Senyo. 5.8 times EV EBIT, 11% EBIT margins, 9 times PE, 2.7% div yield. Okay. Food products. We can look into that. 2924. Oops, that I do not want the video here. 2924. There we go. Next. Oh, a lot of food products. Roko butter. Wako Shokuhen. 89%, 6.9 times. Div yield. Nitaka household products. 4.6. Taka 8.12%, 3.3 times 7%, div yield 3.4%, 0.9 times. Well, not a lot of that. Nitaka looks interesting. 0.2 times. Interesting. I'm gonna do a fun exercise. So I'm gonna do a rank order thing. So what we're gonna do is, let's see, I'm gonna download this. Okay, I'm gonna do a rank order thing, which I haven't done in a while. Let's see here. Let's see. So margin. That's multiple, that's percentage, these are multiples, oops, So we're going to just take inspiration from Joel Greenblatt, essentially. Well, what we're going to do, essentially, we're going to rank order the EV EBIT margins, PE PE multiples, and also the damn, why the next whole month PE so damn crap for so many of these companies? What the fuck? And then also the margins. So we want a combination of essentially low valuation, high earnings potential, right? As much as possible. Yeah. Okay. So how do I do that again? I don't remember. I have to do this from scratch. Let me see. do I do that again? It's been a while. Okay. I am not sure if this is how you do it. Ascending order lowest value first. Yeah, we want the lower the better here. This is the wrong formatting, but I'll change that in a bit. And then, let's see here. What do we want? We want just number. Correct. Okay. Cool. So then we have part one, and then hit margin, right? So, okay, that's the sanity check whether this makes sense or not. So 0.4 times is the lowest, yes. The second one is 1.5, yes. 1.9, yes. 3.2, yes. 3.4, yeah. Looks good. What's the last? So there's a count of 28. Which one's 28? 9.9 times? Yes, we do not see a figure over 9.9 times. Okay, so we're good. So, wow, we have 5 concurrent viewers. Welcome, everybody. Thanks for joining me. Feel free to say anything in the chat. Ask anything you guys want. We're just trying a basically Joel Greenblatt approach right now. To ranking. Basically, in the book that beats the market, he was ranking stocks based off of 2 variables only, very simply, EV over EBIT, and also based off of their margins. So we want a combination of low valuation and also high earnings potential. So just that. Number, reference, that, order in ascending. Dope. Oh yeah, it was already ranked. Okay, cool. Cool. I think we can just copy that formula potentially over. What's the next one we want? Do we want PE? Probably PE. It's cool too. Okay, we can change O to U. O to U. Let's see if that works. What the fuck happened there? Right, EQ. Oh, T. Got the wrong thing. That doesn't make sense. What the fuck? There we go. That makes sense. Okay, 1, 4 times. Anything lower than 4 times? No. 4.3, 4.4. Okay, there's 28. Where's one is 28? 28 is 14.4. Do we see anything above 14.4? No, we do not, so we're good. And then we'll do a, this is PE rank. And then we'll do a price to book rank here. Price to book rank. Okay, and then we'll change from T over to Y. There we go. 3 times number 1. Anything lower than that? Nope. 4. 3. Where the fuck is 3? What the fuck is 3? Oh, I see 2 4s. I see 2 4s, 0.5. Okay. Cool. Okay. Okay, now we do a blended rate of ranking. So how do we want to do this? So let's see here. So this is not true. First, let's adjust this to from 1 to 0 first, because higher the margin, the better. So we want 0 here instead. So I'm gonna do that. So I'm gonna do that. That makes sense. So EV rank, lower the better. Yeah. Higher the better. Yes. Lower the better. Yes. And lower the better. Okay. We have 4 metrics. I think if we're gonna do some blended rate, I don't know if I'm doing it right. I think let's do weighted score. So I think we want, this is very non-nuanced, so let's say 50% times EBIT rank. Then let's see, we have another 3 categories, so let's do a third of 50%. So that is price of book. We could do, let's see, what's PE? We could do, let's do 20% EBIT, 20% PE, and then 10% price of book, something like that. It's very unscientific what I'm doing, but it's okay. PE rank, and then plus 0.1 times this rank. 7 point. Double check these formulas here. Price of book rank, PE rank. Okay. And just double check this is better. Yep. Yep. Okay, so let's do that. Alright, so we need to, how do we do this? We need to sort. And then we're gonna sort by, before I continue, let me just copy and paste this just in case when I'm sorting I fuck up something. So, okay, so there's a backup copy. So we want to rank these based off of score. How to do that again? Don't remember. Sort from custom sort. Sort by weighted score. From smallest to largest. Correct. 6.4. Let's ensure that the ranking didn't screw up after the sorting so that it stays consistent. So 1 is still 1. Yeah, 1 is still 1. Good. And then 2 is still 2. Yeah. 1 is still 1 4 times. Yeah. 2 is still 2. Yeah. Yeah, still number 1 here, 10.8%. Nothing higher than that. Still 0.4. Okay. Cool. So, based off of this very unscientific Nah, man, there's a lot I forget. If I don't use something for a while, I don't remember it. But I kind of have a, I kind of remember it. Yeah. Okay, Havix Corporation. Thanks for the compliment, Jason. I'm sure that people, lots of people in finance, probably better than me in Excel. But yeah. Okay, so weighted score, we'll go from this. Havix Corporation, we'll have a look at that. So let's think about this, let's see why that this got the top score, right? Why did it get a blended rate of 6.4? So it had 6 in rank in terms of EV EBIT, nice. 5.2% EBIT margins, ranked 8th. And then PE ranked 5 times, ranked 4th, and then price of book also ranked 4th. Okay, so that's really nice, I like that. Havix 3895, okay. Let's take a look at that. Let's bring up my other. Let's see here. Let's create a new group. So, new group, we have consumer staples. Staples unclassified. Cool. What the fuck happened there? Consumer staples unclassified. Oh, I went to the bottom. That's why. Okay, okay. Move it up, move it up, move it up, move it up. Let's delete this. Remove group. The Greenblatt method is essentially what I could recall from my head. I might not actually have it exactly down pat, to be honest. But essentially, what is the Greenblatt method that's discussed in the book that beats the market, right? So he just basically rank orders the entire, universe of S&P 500 and also entire U.S. stock market, let's say, based off of 2 variables. I think I forgot which book was which, but one is a valuation multiple. I think he uses EV over EBIT, and then the second is based off of profitability. It could be net income margin, it could be EBIT margin, but I think he uses EBIT mainly because different companies have different tax structures probably and tax savings, right? So the only apples apple comparison is not using a net income line, but also but by using the EBIT line because that's before we include interest and taxes. So different debt structures and also different tax structures as well. So that's why he favors using operating income. This is also what I also prefer to do too. Yeah, so based off of that, 3895 Havix Corporation. We have sugar refining, 212. Nice. And then we have 2924 Ifuji. Oh, sorry, on my watch list. Okay, 2924. Let's move it up here. Itaka, 4565. And then Wako Shokuhin, 2813. Nice, we have 5. Let me take a look at the. Okay, we should freeze pane here. So there we go. That way I can look at these a little bit better. Okay, Sapporo 10. I think anything under 10 is probably pretty cool. Sapporo Clinical Laboratory. What the fuck do they do? Staples Distribution Retail. Let's see, 3.4, 3.4. 7.4 times PE. Ooh, 0.3 times. So number 1. Okay, could be worth looking into. What's a div 2.1%. Sure, we can look at that. We'll add one more. 9776. Cool. Hello, hello, hello. Is my volume good enough, guys? Is it loud enough? I just noticed my mic wasn't actually directly in front of me. Sorry. Apologies for that. Okay, let's do number 1. Havix Corporation. Okay, so last 5 years. Wow, so COVID happened, decline, continuously decline, some resurrection here, and then over the last year. Let's see here. So let's see, 2024 until now, low 400, high 600, 550. So 400 to 560, let's say that's 40%. So within a 40% range, primarily, yeah. Or 50% range, you could say. 500, 600 if you wanted. Sure. Interesting. Okay, what does this company do? Havix Corporation engages in the non-woven fabric and paper-related businesses in Japan. It offers pulp non-woven fabrics, processed pulp non-woven fabrics used in home and kitchen, synthetic fiber non-woven fabrics, and sanitary paper such as disposable diapers and wet towels. Disposable diapers, that's good for aging population. Wet towels, depends what type of wet towels. But Japan gets really hot, so sometimes people buy these Gatsby wipes that cool off your body. I don't know if that's that or that's just wet towels for sanitary and like for senior care, right? Because you might use it to wipe a senior's buttocks, right? The nurse might do that. Okay, interesting. And then let's take a look at the profitability. Oh, I need to change the ticker. So we are looking at right now 389 Havix Corporation. Nice. Awesome. ROE has been fluctuating a lot. 2022 was a really bad year for the company. They had losses, major losses. So if it's after EBIT, then it's probably some write off, some investment, something like that. Or taking a loss from a segment, who knows? Okay. Gross profit margins have been. So they kind of resurfaced back to pre-COVID levels. Maybe there's hope that it can go above pre-COVID levels. I guess even during COVID they had 22%. So this is interesting to see what impacts this company. SG&A has been in a 13 to 14% range. Net income, low single digits, medium single digits. What's their revenue growth look like? So pretty stagnant. So pretty stagnant. Not much revenue growth, but for the gross profit margin to increase as much as it did, and EBIT margin to increase as much as it did after reaching 13 billion. If there's a forecast of greater than 13 billion, then we could probably see some additional operating leverage that can happen, which would be nice. Okay, not bad. Enterprise value, let's see, how have they accumulated cash over time? So they got some debt, and then they paid it down. Now they have more cash. Last 12 months, let's see. 2.8, so 1.4, 1.4. Okay, so around like 1.9. 1.9 billion enterprise value on super damn cheap, actually. Super cheap. Yeah, let's look into this company. Let's look into this company. Definitely worth it. What's their div yield? 3.69. Giggity. Okay, so disposable diapers are not for seniors, I guess, maybe? I mean, they could. These are for babies, for things for babies. Wet wipes for cleaning, I guess. So paper products. They have a long-term vision. We can take a look at that, which is helpful. Company information. Introducing our business that creates a beauty. Okay. History. Sure, we're going to take a brief look at the history. 1950 founded. Switched to paper manufacturing. Black tissue paper. Sanitary paper, toilet paper, and table napkin based paper. Toilet paper production. Napkin paper. Hozumi factory. Disposable diapers. Okay. Box tissues. I wonder what's the chances that they get bought out by like P&G, for example, or 3M. Stock listing in 2005. Oh, so then they started doing fabrics. Interesting. Fabrics. Still very paper focused. Hygiene product for medical and nursing care. Okay, product. Let's search by product line. Highly absorbent towel, ultra warm, fluffy body wipes. Super thick wipes that can be flushed down the toilet. Okay, this is probably, I think this, I saw this in nursing care, they just mentioned. So yeah, you would wipe the senior's ass and then you would flush it down the toilet, I guess. Cooking paper. I mean, that's just like paper towel. I know in Japan when they do a lot of cooking, if there's excess oil on the meat, for example, they would use a paper towel to just kind of pat it to remove some of the oil to be more healthy. Okay, different fabrics, spoolings, sheet, antibacterial synthetic non-woven fabric. Interesting. Very curious what the fabric part is, though. Interesting. Feels like fabrics would be a very competitive market. Yeah. I went to a trade show in Guangzhou, and if you look at actual like fabrics and clothing apparel companies, there's so many of them. So many. It's super, super duper competitive. Okay, let's look at our first thing. Just take a look at how cheap a company is. So we have first quarter, extraordinary quarter, completion of disposal of treasury shares, restricted stock compensation. Do they have? Yes, they do. Okay, we'll need to do some conversions in a bit. Okay, download these filings and then convert them. Okay, this is 3895. This is Q1. Oops. Okay, whatever, that's okay. 3895, fiscal year 24. Okay. Do they have investor presentation? Newsletter. What is that? Newsletter. And then long-term vision is important to read. Let's get to the filings first, and then we'll get to that. Okay, here's Q1. So you can convert fiscal year now. What? Did no sales last quarter? What's going on? Well, the company disclosed consolidated results for the first quarter of March 2020, 31st, 2025, has begun disclosing non-consolidated results from the first quarter of this year. Therefore, the results of the first quarter ending blah 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 and percentage change are not listed. The company has begun disclosing non-consolidated results from the first quarter of this year. Did they do an acquisition? Did they spin off something? What is going on here? Okay, so this is what happened. So in June 14, 2024, the company dissolved their subsidiary in Thailand, Havix Trading. Although liquidation of the subsidiary has not yet been completed, the business activities have already ceased, and the subsidiary is immaterial in terms of monetary and qualitative aspects. In addition, since we do not have any other subsidiaries, we have transitioned to non-consolidated financial statements for the beginning of this year. Please note that as we have been preparing quarterly financial statements for the first quarter, comparative analysis with the same quarter of the previous year has not been performed. I mean, it's fine. I think they could still do it, but whatever. Okay, so that points to, you know, their Thailand operation is not doing well, I guess. Potentially outcompeted by Chinese competitors. Don't know. Okay, reduced profitability, because I remember seeing in the forecast that it was higher than this amount, but that's okay. That's okay. We will use what we have. Okay, so September. Bum, 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 3895. Ticker is 3895. Company is Havix. Last quarter Q1 fiscal year 25. Date is August 8th, 2025. Share price. Where are we at? 434. Okay. Shares outstanding. 8 million shares. 367 897 896. Yep. More cash. Deposits. Securities. No more securities. Okay. Any long-term investments? A little bit. Let's take a look at how the current assets are structured here. Goods and products. Goods and products, 700 mil. Work in progress. Very low balance. Huh. Raw materials. A lot of raw materials. Market cap of 3.3 billion. What's our annual sales like? Was it like 13? I'm too fucking good at this. Yeah, 13. Then grew from 10 to 13. Yeah, somewhere like that. Yeah. 13, and they consistently have like 1.4 raw materials. So they take around 10 turns a year, roughly. 10 turns. Or I guess 13 turns if you use the last one, but they're probably projecting higher sales potentially. Interesting. Well, this is more stable, so 10 turns. Interesting. Goods and products are even lower than that. So, like 20 turns then. Tangible fixed assets, 3 billion. Building, construct, land, 1.2. Interesting. Interesting. So ROIC on this company is pretty good, actually. No lease liabilities. Okay. Damn. 0.5. And the NCIs. No. Okay. Dividend yield. Let's see. 16. So just one annual one. They lowered the dividend yield. That's not cool. Not a lot of intangibles. Alright, let's take a look at annual. Let's see. Okay. Gradual increase in revenues, but decline in margins, pointing to potentially some pressure in terms of costs. We'll have to ask why they are putting it lower. Did they put it lower here as well? Yes. So let's see here. Okay, so let's see if they have any. Okay, future outlook. Regarding the outlook for the future, while expectations for an economic recovery are rising due to factors such as improvements in employment and income environment and an increase in inbound demand due to the weaker yen, there is a strong sense of concern that the impact of the U.S. tariffs policies will have a negative impact on the economy. And coupled with an increase in unstable factors such as geopolitical risks and restructuring of supply chains, we expect the business environment to become increasingly uncertain. We at the company also expect the business environment to remain difficult due to concerns about rising raw materials and fuel prices, labor costs, logistics costs, and other factors. Under these circumstances, the company will strive to rebuild an even stronger management foundation based on the assumption of changes in the external environment, and will relentlessly pursue increased added value and improved productivity centered on hygiene, security, comfort, striving to improve corporate value and achieve sustainable growth. Let's see. Exchange rate is assumed to be 150 yen to US dollar. Interesting. I think the most pertinent thing are probably just rising raw material costs. Probably the most real, and some tariffs. Yeah. Okay, Capex here. Oh, quite a bit of Capex on intangibles recently. Even though their intangible balance isn't really very high. Interesting. Okay, now let's take a look at how much historically they've been paying for something like this. 400, 500. Oh, it dropped a lot. Are they underinvesting? Large capex. So let's see. Semi-large, large capex, followed by smaller, and then large capex, and then smaller. Interesting. 3 years of consecutive lower, and then recently it's capex of one. Oh, there could be one big large capex. Okay, so let's just tally this up. So let's see. 2.2, 2.9, 3, 3.8, 5.8, 6.3, 6.4, 6.5, 6.6 over 10 years, 660 on average. Sure, we're gonna do that. That's fine. Any analyst estimates? None. Makes sense. Small ass company. What's their DNA look like? Really high and then really low. They recently increased capex, so reasonable that it goes up higher. Let's do 250, 270. This probably doesn't matter too much. That's not really factored in there. %, EBIT margins, 8.5 times PE, but if it normalizes, I don't know if this is a normalized state though. So if we believe that costs of the raw materials could drop, then this would be a good one. Still very cheap though on valuation metrics. Decent enough dividend. 0.5 times price of book. Okay, now, okay, so yes, it's cheap. It's cheap. We've established that on multiple metrics. ROIC, ROA, okay, 10%. Okay. Cash flow, and then over here. Yeah, we have no sense of like DNA last 2 years has been really low, and then historically over here it's a lot higher. So we could figure out, were they expanding operations? CapEx more maintenance or growth? How much of that was that? Yeah. Then revenues haven't gone up that much, so that's unfortunate. Okay, what's our medium long-term goal here? Let's see. Company that creates beautiful lives. Okay. Digital transformation, which makes sense given its CapEx on intangible assets. Creating new business and new fields, strengthening competitiveness. Business portfolio, create new businesses and fields. Let's see. Sanitary products, medical nursing care products as new fields, alliances and M&A. Technical collaboration and joint development. They definitely have enough capital for that. They have a lot of decent amount of cash. 1.6 billion. A bit of cash, not that much, I guess. Factory automation would help with margins potentially. Overseas and domestic bases, interesting. Digitization. Right, financial targets. What are you targeting? 2031. So in 5 years, you want to get to, well, I guess 5.5 years from now, but yes, sure. In 6 years, you want to get to 15,000 billion yen, increasing EBIT margin to 7.3%, which is 1.1. 1.1 on 15. That's like a little over 6. That's like, yeah, 7.3%. Yeah, over 6.6 for sure. It says right here 7.3. That's what they want to do. I don't know what the fuck the action plan is though. Okay, let's download that. Okay, well, it's translating. Let's see if there's anything here. Okay, Havix family summer issue. Fresh, safe, and comfortable. We provide the value of we support your comfortable lifestyle. I don't like how the margins decrease though. Okay, so non-woven fabric business related business. Sales increased 3.4% and segment profit increased 29%, which is great. Hello, Quantum Shore. Hey, I haven't seen you before. I haven't seen that username before. Welcome, welcome. If you're new to the channel, please subscribe. Yeah, thanks for joining. And then paper-related products, 1% decline in sales, but then 14% decline in profits. That probably has to do with COGS and price of raw materials. I don't understand why I decided to decrease its dividend yield. So they can invest more? The main raw material is pulp made from wood. We use pulp made from well-managed forests. It uses pulp. Some products are made from recycled materials, such as disposable diapers. It uses pulp. Groundwater to form the pulp into sheets. The groundwater is dissolved in water. What? It is filtered through the increased paper strength, chemical dyes, etc. If necessary, add it. Havix paper house made pulp. Fiber dissolve the dye in water. Form it into a sheet. Drain the water on a wire rack. Heat dries the paper. Use high-speed machines to produce paper customized for customers' requests. Passage of diapers. Now they do wet towels for cleaning dogs, I guess. Our hygienic, high-quality paper is already being used in many hygiene products. We will continue to make full use of paper manufacturing technology and know-how we have cultivated since our founding. Actively investigating needs and conducting R&D. So they're going to do cleaning. The future includes cleaning products. And what's next? Let's see. The horizontal recycling project for disposable diapers run by Unicharm Corp. From Use, Collect, and Reborn. The cycle is based off of the use of disposable diapers. We aim for a future where nothing is thrown away. Havix is also participating in the project. The companies cooperating. Unicharm Corporation. So collaboration with Unicharm. What Havix paper is where our disposable diaper is used. Disposable diapers absorb moisture powder for absorption. Absorption body polymer, the role of wrapping we are responsible for. Okay, so some of these translations are kind of off, but it's okay. We can interpret what they're saying. Okay, so I guess what this means is Unicharm collects these diapers and then Havix turns them back into diapers that are used on babies. The babies it's thrown out. Burning used disposable diapers. Forest resources newly used. So some of them end up in burned up, and some of them ends up in Unicharm. Ozone treatment, special treatments with acid that make it safe and clean back to material. Okay, so they do some treating process and then it can be used. Okay, oh, I see. So then it sells this paper after processing. It sells this paper to Unicharm to make diapers, I guess. If you recycle the equivalent of 100 adult diapers for 1 year. For 1 year. 21 car reduction and 60 trees, maybe? B2C product brand, Curian. We require OEMs who outsource the processing of Curian products to provide products that comply with our standards. Our company is safe and secure to deliver products, sample inspection. We're doing so. REFF quality assurance department initiatives. Recycled pulp is used in the product. REF project aims for recycling. In partnership with Unicharm Corporation, we established a consistent quality control system for receiving recycled pulp to manufacturing, allow us to ensure that even when recycled pulp is used, same quality as before. Okay. Evolving Havix. The quality assurance has been limited to the conventional product of base paper rolls. In addition, we will continue to accumulate know-how for quality assurance of new products and strive to further strengthen safety and security. News. Improve company website. Okay, everybody, it's been around an hour and I want to use the bathroom, so I'll be back in around 20 minutes. Thanks for tuning in. Oh, we have 8 concurrent viewers. Holy shit, that's a lot of people. Okay, so before I drop off, I guess we might as well recap and have some goal for when we come back. Okay, so essentially, yeah, welcome everybody. Welcome everybody for tuning in. I'm really glad that we have so many viewers. Holy shit, we have 9 now. Yeah, thanks for tuning in. We are looking at Havix Company. They do paper products, diapers, paper, non-woven fabrics, recycled fabrics, that sort of thing. Trading very cheaply at half times book, offering 3.7% dividend yield. Um, it trades between a range of low of 400, high of around 560 to 600. So it has like a 40% upside based off of its historical range, but it's trading at the lower end of that range. So there's definitely upside potential if we want to think about technical analysis, but I don't recommend that for most people. But yeah, if we want to think about it like that, sure. What's concerning is that in this year, EBIT margins are forecasted to drop because of increase in cost of raw materials. Um, this is their conservative estimate, so potentially if there is a decline in the price of raw materials, then potentially this could increase. And I would like to look at historically, actually, what is their historical profitability in this regard? A huge range, a huge range. So sometimes I guess COGS, raw materials costs are low, and so they generate more profits, and then sometimes it's high. So let's see cross profit margins. Yes, fluctuates. So really COGS is a huge thing, but it trades a low multiple, low PE. In a normalized basis, if we let's just say 5%, whatever. Let's see what happens. Let's use a notepad for this probably. Notepad. So let's see here. Sometimes. About 5.5. 6.5. They probably have some like net income 6%, ordinary profit. Okay, they have some like investment income and also some other things, so it's kind of like not the most representative. But yeah, probably normalize around like 5 to 7 times, which is fine. Yeah, what we're trying to figure out is how stable is this revenue growth? Are they going to continue to grow their revenues? Will we see a rebound in margins? And or do we feel a conviction in their medium-term plan of potentially increasing their dividend, performing some level of buybacks if they have it? Actually, we do not know if they do buybacks. Do they do buybacks? Are revs stable? For I think 7% EBIT margins. Okay. What business field can they grow into? Yeah, I'm just figuring out their recent capex, whether that has something to do with like growth capex and whether that can help them, because they're trying to expand into these like fabrics. So I don't know what the size of the fabrics business is, but it's basically understanding where this company has the potential to continue to grow, have some operating leverage, and then grow its share price. If you can do these two things, then yeah, this is pretty cheap, pretty cheap. So yeah, I'm gonna take a 20-minute break, and I will be right back. Right now it is 5:50, so let's say we are back at around 5:10. 5:10. Yeah, thanks everyone for joining me, and if you haven't subscribed yet, please subscribe. And yeah, we'll come back today. I wanna, if I can, if possible, I wanna get to 5, A-tier stocks. If we can do that, I can release a post by the end of this week that will submit to everybody on my Substack. So yeah, thanks for tuning in. Okay, we are back. Oh, thanks for staying around, guys. I see 3 of you. Thanks for tuning in. Okay, Havix. Let's see, what other questions we have about this company? Just reading what I wrote. With expanding operations, is CapEx more maintenance or growth? Do they do buybacks? Are revenue stable? Or what business fields are they gonna grow into? Seems like they're trying to expand into like more sanitary products, cleaning products. Do some recycling stuff, but who knows how profitable that actually is, or that's just virtuous signaling. Okay. Do they have other materials for me to look at? Definitely take a look at the security support. That's probably useful. Havix in 5 minutes. Sure. What is this? That's interesting. So, founded in 1950. 208 employees. Among the 3 domestic manufacturers of air-laid pulp woven fabrics, among the 3 domestic manufacturers of air-laid pulp non-woven fabrics. Hold on, is this the same thing? Same thing, okay, one company. Non-woven fabric and paper manufacturing and processing. Adult paper diapers. Okay, so they have baby diapers and they also have adult paper diapers. Cooking paper share of 40%. Yes, when Japanese people make fried foods like tempura, they would use this. Yeah. 20% of diapers, 20% of wet towels, 20% of table napkins. I mean that's, yeah. So restaurant industry expands. That's good for this company. People have more babies. That's good. Wet towels. Wet towels. I guess they use wet towels at restaurants. Cooking paper. That's good. More people cooking by themselves indoors. This is good too. More fried foods. This would be good. Because Japanese like the pet oily foods. This is good for like an aging population. So diapers so you diversify away from a younger generation and to an older generation. So I guess these kind of hedge each other, I guess, which is interesting. We evolved from our current business model, which is centered on production of base paper rolls, to manufacturing that creates new value, including the processing of final products based on customer needs. So for the long-term vision 2030, we'll focus on processing of sanitary products such as new business and medical and nursing care as a new field. Okay. Environmentally friendly products, 7.3%. If they get to 1.1, and they trade at, let's say, let's say 30% tax rate, notepad around, let's say 700. Let's call it 800 mil times what, 4 billion. I guess they have some investment income, some other things that also generate income for them too. So let's say 900, so 9 times 5, 9 times 6, 5.4 billion. I'd say pretty stable business. They have a large market share in a lot of businesses, so they should be doing well, I feel. Yeah. Low margin business. Okay, I'm gonna download this report and just read it and then see what I think. And then I think that is enough research that we've done on this one name for today. I should also look at the register to see like if anyone owns a large chunk of this company. Sumitomo Mitsui makes sense. Okay, 8.6%. Shogo Sakai, who is this? CEO of Daisuke Fukumori with 5.5%. 5.5% on it's around 160 billion. 160 billion. Sorry, 160 million. So 1.6 mil of his net worth is in this company. Okay. Some banks. Yoshimitsu. Who is Yoshimitsu? Son? Okay, so others on 71%. Financial institutions on 14%. Okay. I want to take a look at the business overview real quick. Employees have gone down. Revenue's gone up, so some cost savings probably. Havix trading is closed. "2020 started processing non-woven fabric masks." Ah, so they're trying to benefit from COVID, I guess. Which makes sense because they use sanitary paper. Okay, non-woven fabrics produced and sold by the company are mainly pulp non-woven fabrics, air-laid method, and synthetic fiber non-woven fabrics. Pulp non-woven fabric is a non-woven fabric made primarily from fresh pulp and mainly used for cooking paper, hand towels, drip absorption sheets, meat and fish drip absorbers. It's sold as an intermediate material or processed into cooking paper on our own processing line. Synthetic non-woven fabrics are made from chemical fibers that are made primarily used as service materials for disposable diapers and pet sheets, and are also sold as intermediate materials. Manufacturing method in which pulp fibers are layered using airflow and then bonded with adhesive. Manufacturing method in which heat melting chemical fibers are layered and bonded by thermal bonding. Paper related business. The paper produced and sold by our group is sanitary paper made primarily from fresh pulp and is primarily used for wrapping absorbent materials in disposable diapers and pet sheets, as well as for hand towels and table napkins, and is sold as an intermediate material. Bangkok. Oh, they have a labor union. Oh no. Our labor union is called the Havix Labor Union. It was formed in 1996. The union has 178 members and is affiliated with the Gifu General Labor Union. Labor and management relations are smooth and there are no notable issues. Havix Trading, a consultant spirit, does not have a labor union. I see. I'm gonna ask Grok a dumb question. What are non-woven fabrics? What does that mean? Yeah, what are non-woven fabrics and what are woven fabrics? Let's see here. Oh, without weaving or knitting. Fibers are arranged randomly or in a specific pattern, creating a web-like structure. Examples include felt, spun-bound, and melt-blown fabrics. They're used in products like disposable masks, wipes, filters, and medical gowns due to their versatility, cost-effectiveness, and ability to be engineered to specific properties like absorbency or breathability. Woven fabrics are created by interlacing two sets of yarns, warp, vertical, and heft, horizontal, on a loom, forming patterns like plain, twill, or satin weaves. They're strong, durable, and structured, with examples including cotton, denim, and silk. Yes, woven fabrics are used in clothing, upholstery, and linens, valued for their stability, texture, and ability to hold shape. Key differences: structure. Non-wovens lack the interlaced yarn structure of wovens. Fibers are bonded, not woven. Production. Non-wovens are faster and often cheaper to produce. Wovens require looms and more labor. Properties. Non-wovens can be soft, porous, and disposable. Wovens are typically stronger and more structured. Uses. Non-wovens dominate in disposables and technical applications. Wovens are okay. Good to have that cleared up. Okay, let's see here. Sanitary materials product. In the hygiene materials market, where our group provides materials, the market for pet sheets is performing steadily due to the growing demand for adult disposable diapers as the aging population advances and growing interest in living with pets due to changes. Okay, that's a very weird sentence structure. What it means is that these older adults feel lonely, so they have pets, so there's more interest in pet treats. On the other hand, the market for baby disposable diapers continues to face difficult conditions due to factors such as decrease in number of births and decrease in demand for Japanese-made disposable diapers. So it might be cheaper to get something like from P&G, something like that, or you know, Johnson and Johnson, whatever. I don't know who the primary diaper manufacturers are. So food service market, the restaurant industry market, to which our group provides products, is performing well with inbound demand reaching a record high. However, the situation remains unpredictable due to factors such as rising import costs, including energy, rising logistics and labor costs due to labor shortages, and rising prices that are leading general consumers to become more frugal and selective. So price is number one issue here. The group has formulated the long-term management vision 2030 and first medium-term management plan 2026, covering the 8-year period from fiscal year 2023 to fiscal year 2030 through 5 management strategies, creating new businesses and fields. That's good. Strengthening competitiveness, strengthening the management foundation, human resource, addressing sustainability. We'll strive to further increase our corporate value and further expand our operating profit by shifting to a business model that's less susceptible to the impact of external environment and improving profitability. Issues to be addressed. Rising costs due to rising prices and labor shortages have become more pronounced. Meanwhile, machinery and equipment invested in during the period of high economic growth is aging and reaching a time for replacement. And some of our competitors are taking this opportunity to reconsider their future business development. In order to fulfill our social responsibility in this changing business environment, we will implement bold and timely measures to address the following issues. So it seems like some capex are gonna, major capex is gonna come. To date, we have earned the deep trust of our customers by responding to changes in social and market needs and providing high-quality paper and non-woven fabrics. However, given the current state of the materials business, there are limits of future potential if we continue in this direction. Therefore, in order to achieve sustainable growth, we need to develop business areas of higher added value. That doesn't sound very good. We provide 3 materials such as used in sanitary products, and by strengthening our processing business that utilizes these materials, we will evolve from a materials manufacturer to a sanitary product manufacturer. We'll strengthen our processing business by expanding our own brand, Kirine. I wish they called it something different. That's kind of hard to pronounce. Kirine. For sanitary products for medical and nursing care, and by producing OEM products for customer brands. At the same time, we'll pursue the enhancement of additional functions by building diversified and strategic alliance relationships with other companies. Aim to quickly establish our new business in medical and nursing care fields by recruiting mid-career personnel with specialized knowledge. Do they do any buybacks? Excuse me. Barely. Barely. prices of pulp, the main raw material for our products, and heavy oil and gas, which are used in fuel, are affected by factors such as international supply chain balance and speculative buying, and are also affected by FX rates. Sure. Significant fluctuations in pulp and fuel prices and foreign exchange rates could impact on the financial position and business performance of the group. Our group is constantly searching available and expensive raw materials, striving to improve our production technology so that we can make full use of our variety of raw materials, and reducing risk by diversifying our raw materials suppliers as much as possible. To do currency hedging. Sales to Unicharm Products Corporation, the group's main customer, accounted for approximately 22% of total sales for the fiscal year ending 2025. If transactions are terminated or significantly reduced in the future due to changes in the customer's policies or other reasons, this could have an impact on the group's financial position and business performance. The group recognizes that it has good relationships with its customers and will continue to strive to maintain these relationships while cultivating new customers and reducing risk. Okay. Price of pulp. Is that a thing? Can I search that up? Differences in quality of pulp. Different prices across different geographic regions. Why is China so cheap? Interesting. Are we at an all-time high right now? Not necessarily. We've gone down a little bit. China. Oh, it's actually gone down. What the fuck? Oil prices probably then? The group's pulp non-woven fabric production equipment was made in Finland and is a special facility that's owned by the group in Japan. If an unusual problem occurs or it becomes necessary to procure special parts, it may affect stable operations. In such cases, the group's financial position and business results may be affected. almost 20%, almost 10%. That's a massive ass adjustment. Adjustment of the segment profit by 1.1 billion is corporate expenses not allocated to each report. Oh, okay. Corporate expenses are mainly G&A expenses not attributable to any reportable segment. What the fuck? That's a lot. Okay. So, okay, Unitron Products has 2.3 billion in sales. Non-woven fabric related business and paper related business. Let me think. Trying to see if we can extract anything. I have no clue about commodities in terms of pulp. Tailwind from energy, limited relief from pulp energy costs have been growing. Chance of easing in late 2025-26, but pulp looks flat to slightly firmer after rebounding in 2024 when a weekend works against importers. Correct. So yen strengthens country discovery. Yeah, for sure. Meanwhile, cost relief requires energy actually softening, FX stabilizing, and contract resets flowing through. After spiking in 2022, pulp corrected in 2023, bounced in 2024, and broadly sideways in 2025. The World Bank's commodity updates, non-energy. The U.S. wood pulp PPI point to mostly flat / slightly up pattern. Japan's CGPI for pulp and paper products is modestly higher year over year with higher import content. Weakness inflates effective costs. Fuel costs. Oil forecasts guide Brent lower into late 2025, early 2026. Some private houses echo this. LNG Asia spot JKM pop mid 2025 but remains range bound. Japan power JEPX mixed prints VS 2024 but structurally sensitive to imported fuel. If fuel eases, power can follow. Pulp looks sticky, plus FX headwinds, so big cost relief from fiber alone is unlikely near term. If energy softens as projected, lower power, steam, transport could cushion margin pressure. However, contract and pricing lags mean benefits below delay. What to watch? Structure of pulp procurement, tenor, formula, FX hedging, energy cost sensitivity, and capex on efficiency. Pricing pass-through cadence by channel, FX. Okay. It's looking less interesting now. Like, it looks not bad, but I feel like it's less interesting now. Could be something you can put in A- category though. Could be just B+, honestly. Yeah. Okay, my throat's feeling a little bit thirsty. I'm gonna make myself a drink. I'll be back in like 15 minutes. Before I go, look at the watch list. So we'll probably look at 2112 Sugar Refinery. Let's see, 2112. Yeah, 2112 Sugar Refinery is next when we come back from break. So. Okay, so next company is Insweco Sugar Refinery. So let's see here. Last price 404, 11 billion market cap. Is net debt 17 enterprise value. Long-term investments. We don't know if that's the actual true amount. 3.7% dividend yield. 8.8% EBIT margins, pretty good. 5 times PE. Next 12 months, 19 times. 6 times EBIT. Let's see. And 0.7 times price of book. Not bad. Take a look. Well, okay. So has consistently risen, gapped up. Wonder what type of news makes it gap up. No news. Okay. Okay, description. Insweco Sugar Refinery manufactures and sells sugar products in Japan. It offers refined granular white stick brown liquid sugar, lactose, fructose, and this other thing, Solacea granules. It also provides sugar cubes and gum syrup for the home and commercial use, as well as beet-related products and ice creams. The company offers products online under Pearl A's brand. Oh, 1904, so over 100 years old. Take a look at the profitability. Let's see. Let me change the ticker. I'm good at changing the ticker today. I don't know why. Usually I just do the analysis and I totally forgot about this. Alright. Okay. Oh, interesting. So the core business is very low margin, but there's some level of operating leverage happening. Gross profit margin increased up until COVID and then has dropped drastically. SG&A has gone down. Okay. Huh, so recently it's gotten more profitable somehow. Somehow it's gotten way more profitable. So to figure out what that is, why that is the case. Interesting. So, okay, so historically it's had debt, it's paying down debt. Potentially has some debt burden. Let's take a look. Operating income. Right, net interest expense. So investment income, 100. 80 to 100 in interest expense a year. So not too bad. Investment income. So they're generating a lot of money from investment income somehow. Interesting. Worth taking a look at, I guess. Curious why that is the case, honestly. So low market cap but high enterprise value because of debt, the existence of debt. Just had periods of outperformance, so probably some level of debt pay down for sure. Let's see. That's about 6, 11 to 17. PE 4.6 times. Huh, so if sugar prices normalize, I don't know what. Give me a breakdown of sugar prices. Yeah, you're right. On the side, I'm just going to ask ChatGPT about sugar prices. doubled. April dropped 280. Now it increased 120. It's up 40%. Oh, concentrated drinks. Refined sugar and sweeteners. Oligo. Don't know what that is. Red beet. Cyclodextrin. Solacea. No clue what some of these things are. Sugar refining. 120-year history, so probably going to continue staying around. What is this though? Oligo no akage brand products are functional sweeteners made from sucrose, found in sugarcane, and lactose, found in milk. Their main ingredients: lactose, fructose, oligos, however you want to say that, oligosaccharin, oligosaccharide is a typical example of prebiotic food. Oh, that promotes health by increasing beneficial intestinal bacteria such as bifidobacteria, don't know, which are naturally found in the stomach. The Oligo brand household series has been approved by the Consumer Affairs Agency as a food for specified health use. Has been recognized for its intestinal regulating effects and calcium absorption promoting effects, featuring a delicious sweetness. Can be safely consumed by babies and elderly. Interesting. Red beet series of products that is made from beets, a miraculous vegetable packed with nutrients and processed to make it easier to incorporate into your daily healthy diet. Dried beet chips are made from pesticide-free Hokkaido beets cut into easy. Okay, so maybe their increase in margins are coming from some type of consumer product potentially. Let's see how the income has gone. Revenue stream 32 billion. 26 to 31. 26, 26, 23, 28, 31. Okay. Maybe that's something contributing to it. One bag is equivalent to about 1.5 fresh beets, 450 grams. No prep is required. You can use them as a substitute for fresh beets in dishes like soups and hamburgers. I would not put beets in my hamburger, but okay. Now in drink form is made from Australian beets that have been extracted to retain as many of their nutrients as possible, and vitamin C and other nutrients have been added to make it an easy to drink. Interesting. Bio-related products. Cyclodextrin is a non-reducing, oligo. Let's call it oligo. That's too difficult. Consisting of 6 to 8 glucose units linked together in a ring with a cavity within the molecule, making it a unique carbohydrate with a hydrophilic exterior and lipophilic interior. Dude, I do not know what any of this shit means. It is particularly notable for its something class 3 properties, the ability to enclose various molecules within a cavity, which has led to its use in a variety of applications for purposes such as stabilizing and improving quality. Quality of what? The fuck? CD is also known as magic carbohydrate and widely used in a variety of fields, including food, pharmaceuticals, cosmetics. What? Okay, so they manufacture some type of chemical. What's the main use? Alright, I'm not gonna try. Okay, and then what's this last thing? Last thing is Solacea. Genus plants. Solacea is a climbing plant that grows naturally in tropical regions such as India, Sri Lanka, and Southeast Asia, and has been used locally as a valuable plant for maintaining health. Our company manufactures and sells Solacea plant extract powder, which is made by drying and crushing the roots and stems of this plant, extracting the extract components with hot water, and then encapsulating the powder into cyclodextrin, which has the effect of improving taste. Okay, I don't know about the other two. I'm curious as to why they recently were able to increase margins so substantially. Cool. Doesn't seem like they have an English version. No. No, they do not. Okay. Top interview. Oh, they have a new president. Oh, that's something interesting. Huh, into 2023. And they have been done quite well in the last 2 years. Brought out new growth and development. Okay. I'm just reading this. Okay, in the sugar business, sugar consumption has been declining year by year due to the rise of high-intensity sweeteners. In this environment, to maintain and grow a business, we must halt the decline in consumption by providing accurate information to our customers about sugar, an important source of energy for the body, and establish a profit base. Despite rising raw material costs in the previous fiscal year, we received deep understanding from our business partners and customers and made efforts to sell at fair prices, which resulted in a certain improvement in profits. We will continue to take on the challenge of revitalizing the sugar market in order to establish a profit base. In addition, in the oligo business, a food for specified health uses, it's a flagship product, okay. Health conscious and beauty conscious people trying to sell this product, okay. Hmm. I have no clue if this is bullshit or this is legit. Like whether there's actually health benefits to this type of sugar. It's hard to say. Meanwhile, with regard to new business, we are currently considering future business development, including a renewal of our first product, Beet Drink. In order to make the beet business profitable and grow it into our third pillar business, we will continue to work with unwavering determination, striving to improve and innovate with the aim of popularizing beets as healthy for the body throughout Japan and increasing sales of our beet products. Okay, they want to create a new sugar product that helps with water retention, preservative properties, antioxidation. Hmm. Okay, And as for the sugar business, as I mentioned before, we have been able to pass on the rising cost of raw materials to sale prices, which is good. Okay, so commercial use products have performed well due to factors such as recovery of inbound and tourism demand. So of course restaurants use sugar. When you make a teriyaki sauce, you use sugar as well. Okay, international sugar market is unpredictable right now. Influenced by overseas raw sugar prices and foreign exchange rates. This sounds like they have some capex coming up. So they said this requires careful analysis and the formulation of multiple plans. Furthermore, we have large-scale sugar production facilities. In order to continue to steadily supply safe and secure products, we need to make appropriate capital investments at appropriate times. We are currently preparing to explain these points in an easy to understand manner. So I realize that recently their margins have gone up. Is that because depreciation has dropped because of former capex? So now that because they have more capex, depreciation is going to increase and then margins are going to decline again. Maybe that's the case. Okay, so they said last year they had a business alliance with Daito Sugar. We're currently in the process of holding detailed discussions with each division of both companies to build an ideal collaborative structure for generating synergies. I don't know what the nature of this alliance is. We'll have to look into that. So let me just write this down real quick. This is 2112. Things to look into. You have to look into sugar industry. We have to look into recent business alliance with Daito Sugar. What else? What the fuck is oligo? Yeah, is oligo legit or not? Beet drink. Popularity of beet drink. Fad or legit. Health benefits. Yeah, this guy loves taking photos of himself, man. Holy shit. Do you have to have your photo in every single question response? Most companies I look at, there's just one photo of the CEO, and that's about it. And then you have these question Q&As. This guy really likes himself, I think. Oh, shareholder gifts, so maybe get some sugar. Oh, the company was founded in Taiwan. Oh. I guess he's trying to be respectful to this heritage. Indirect brokers. That was 2.3%. If you hold 1,000 or more shares, how much is that? Sorry, 100. You have to own, what's it, 400,000 shares or 4K worth of shares? Okay, what do you get? Less than 3 years, you own 3,500 yen worth of stuff, so 35 bucks. So like 1%, less than 1% return, like 0.7, 0.8% return. So not a huge incentive, I guess. But it's nice, you get something, some additional thing. You get, yeah. Yeah. You would think like a sugar company would like to produce some IR things. Okay, I'm gonna quickly download these items. Okay. Let's model this company. What the fuck? Okay, it's 404. $35. 15. Not bad. Okay. Okay, no incidents. What's the forecast looking like? Let's see. What the fuck? 2.1, 2.3, 6.6%, 2.1 on what? 8 times. Hold on, let's see. Long-term investments. Double check I got that right. Yeah. That's why they keep getting earnings from their investment income. So they're doing well in that regard, it seems. Okay. Wow. Doing very good. Doing very good. No change, no change. Slight decline in revenues, slight decline in margins. Not much purchasing of additional investment securities, but definitely had some sales. Loan expenditures. Revenue from collection of loans. Thanks. Okay. Take a look at historical data. It has gone down. So I think they're gonna have a period of capex, higher capex, probably, maybe. Oh, but it's very stable though. They did point to wanting to do some capex, but probably the last 2 years have been kind of low. So probably normalized state maybe anywhere between 500 600 is probably normalized state. Yeah. So probably the most recent quarters of capex aren't as yeah. And then when the capex increases, probably the D&A will increase as well. 578. Yeah, probably continue rising. They could have higher capex. Could be something like this. Oops. Could be something like that. Yeah. Sometimes PE cheap if we factor in long-term investments. Core business not that cheap. Probably unwind it and use their long-term investments in regards in some area. 3.7, so they could raise their dividend yield. They could repurchase shares. I wonder if there's any commentary on is this a medium-term plan? Did they have a medium-term plan? Did they have something like that? Plan. Let's take a look at what the company itself says first, and then we'll look into other documents. So sugar business, biotech business, other business. What is their revenue breakdown? Let's take a look. Okay, biotech very low. So mainly just sugar business. Yeah, primarily sugar business. Everything else doesn't really matter. And the sugar business generates, it generated very nice profit margins. Segment profit margins about 12%. Almost 22%-ish for biotech. Biotech is still good. Here is still high. Corporate expenses 344. So they have lowered it. Outlook remains uncertain due to factors such as rising raw material costs, impact of weak yen, and uncertainty regarding overseas economies. Okay, so I asked you ChatGPT about sugar. So give me a breakdown of sugar prices in Japan, internationally, where in the cycle are we and where are we headed? So retail prices, sugar costs are around 473 yen. It's 744 yen per kg, bringing to around $345, $5.40 per kg in USD. Average national price. What the fuck? Okay, those are prices in Tokyo, Yokohama. National average price 263, so it's cheaper. Are you talking about what the fuck is this? That doesn't make much sense here. Okay, where's this coming from? Oh, there's actually. Oh wow. Are these like wholesale? The survey covered 3,800 stores nationwide for merchandising. Average price is a simple average of the highest price by product by store. Key prices are the top 3 most frequently sold prices. Ah, interesting. White superior soft sugar, granulated sugar, soft brown sugar, average price. Interesting. Oh, when there's a special sale, you can get it on sale for like a third of the price. Interesting. Import price range. Typically 67 cents, $1.12 per kg. $1.05 to $6 per kg. Okay, sugar prices have gone up. Export price, white sugar. Japan exports white sugar at $2 and oh wow. Raw cane sugar is okay. White sugar exported at this price. So they import it for this price and then they refine it and sell for this price? Is that how that works? Japan's sugar consumption is a 40-year low, falling to approximately 1.9 million tons. Influenced by demographic decline and shifting consumer patterns. Yeah, people don't like sugar. I don't even like sugar that much nowadays anyways. Domestic prices in Japan are notably higher than global averages, influenced by limited local consumption, import costs, and weaker demand trends. So I see some headwinds here. Sugar futures. Holy fuck. India's export expansion and oversupply, leading to lower prices in sugars. Oh. Turning up. Demand side signals, especially from China, are triggering a rebound. Oh, prices forecasted to increase. Oh, shit. So, because sugar prices went down, the company probably profited quite well from oversupply. Now it's probably going to be more pressure on margins now. central and southern Brazil, a major sugar producing country. But the outlook of global sugar supply and demand to lean towards oversupply limited the upside. In June, selling mainly by speculators increased, and the near-term July contract hit a 4-year low of 14.68 cents, before eventually closing at 50.48 cents for the first quarter of the fiscal year. Domestic prices, market prices, published by the Nikkei Shimbun newspaper, per 1 kg large bag of pure white rice, began the fiscal year at 240. I don't think that's right. This is white sugar. Began the fiscal year at 249.51, and remained at this level throughout the first quarter of the year. In domestic sales of refined sugar and other sugar products, sales of household products were sluggish. However, sales of commercial products, particularly to beverage users, were stronger due to the rise in temperatures caused by the dry rainy season. Furthermore, with the holding of the Osaka Kansai Expo, demand for tourism, including inbound tourism, increased, resulting in sales exceeding the same quarter of the previous year. Okay, so increased tourism leads to increased demand for food, results in increased demand for sugar, probably. Sales for the sugar business were up 5.9%, and the segment profits are up 7.7%. Biotech side. In the oligo division, we have engaged in various advertising and promotional activities, such using beauty expert Iko and Rakugo performer Suruko Hayashiya as main characters to establish the image that oligo-intestinal health. As a result, sales of products for core users, such as large volumes, were strong, but sales of household commercial products were sluggish, and sales fell below the same period last year. In the cyclodextrin division, sales increased compared to the previous year, due in large part to large orders from certain users. The beet division focused on sales on e-commerce sites, but sales were lower than the same quarter last year. As a result, sales in the entire bio division were up 4.7%. The segment profit was down 9.4% due to increase in production costs due to rising prices. In other business, we have made efforts to utilize our own real estate by leasing out a portion of the new ESR building office space, raising in sales of 33 million and segment profit of 18. Oh, nice. As a result, the above consolidated sales. Okay, so they have some like other business. Let's think about this. Sales have been increasing. Yeah, profitability very volatile relative to, very dependent on sugar prices, essentially. Tailwind is tourism, headwind are COGS. Could be something in terms of like their other businesses growing. That could help. That's around 7%. Sugar business, 1.8, 400, 20%. Oh wow, biotech not bad. Biotech not bad. Oh, close to 20%. This is over 20%. Oh, okay, not bad. Okay, slightly declined. Sugar business gone up a little bit. Profit. Oh, really high. So this is like 12%. feel like they could manufacture some like wait, let's take a look at their. I feel like with that much capital, they could easily make some type of candy, make something. Yeah, they did a beet drink. They could do some drinks. They could do like there's so many avenues. I feel like they could pursue. Hmm. The question is, if they were to get to a normalized state where the margins were to just drop, what would happen? What would happen if it drops to like a 4% rate instead of its recent, great performance? You know what I mean? 4.7, yeah. 4.7, but then recently it's gone up quite drastically to 8.9, now forecast to be 6.6. But what happens if it drops to 4 again? Right? If it drops to 4 again, then, because one of these situations, times 5.9. Take a look at the enterprise value. Major debt pay down. .7, 14.6 at one time. What's their cash flow statement look like? I feel this is a business you would invest in based off of news, potentially. Like, oh, sugar prices are gonna drop, right? That would be good for this business. Like raw sugar before refining. Tourism benefits this company. Drop in sugar prices benefits this company. People eating more unhealthy benefits this company. I generally think that they should make some type of snack, candy, or whatever the fuck. Soda even. That would be good, right? Like market cap of 11 billion, 17 enterprise value. So yeah, they could pay down their entire debt balance if they just liquidate their long-term investments. Hmm. Don't have high conviction on this. Kind of new to the sugar industry. I would give this like a B plus, like a B probably. Yeah, B. It's a B. B is fine here. Yeah. Yeah, I would put this in the value trap of low margins, may experience operating leverage. Oh, that's most interesting. E Fuji Sanyo. Okay. Yeah, not gonna lie, I'm a little bit hungry now. So yeah, as a recap, today we looked at two companies, right? One that we found was 3895 Havix Corporation, um, which I like. Yeah, this trades really cheaply. Yeah, let's do a quick recap of the one I do like, and then we'll end the stream. Yeah, thanks for tuning in, guys. So yeah, let's take a look at Havix. Yeah, so Havix engages in non-woven fabric and paper-related businesses. And so they do diapers, they do paper towels, they do adult diapers, baby diapers. Yeah, and the thing about the company is that decent dividend yield, could be higher, honestly. They trade at 0.5 times price of book, so could benefit from a buyback catalyst, excuse me. Um, yeah, trade pretty damn cheaply. Low EV/EBIT multiples, and yeah, low PE multiples, and decent ROIC. Not really high, but like not low as well. Yeah, and it seems that they are trying to create new products, like go into nursing, create more sanitary products. So there could be some avenues for revenues to grow. There could be. I don't remember there. I don't recall there being any like concentrated shareholders. So definitely there could be some buybacks. And just want to figure out. They had some period of time where they spent quite a bit on capex. Want to figure out if that was mainly maintenance capex or growth capex. And then, yeah, the thing that is not as great as for this company is that sales growth is rather gradual, right? It seems like the company can maintain its margins, probably can maintain because they have quite a bit of market share, like 20% in baby diapers, 40% in senior diapers, and then can't remember the rest. But they have a decent market share in the paper products industry. And the question is, how can they utilize their excess cash, excess to grow the business? The market cap is kind of low, if I'm gonna be honest, kind of low. So it's like, yeah, it's probably really like hidden hidden company. Let's take a look at the share price real quick. It just trades within a range, but it's on the lower end of the range, so I do like that. I do like the fact that it's on the lower end of the range. At support around like 420. Can grow up to as high as like 500 something. And yeah, if we think about it, like if more people cook, right, try to save money, then that's good for their paper towels. They also make napkins, right? So more tourism, also good for napkins. They have a 40% market share in adult diapers. So like an aging population, it's like a head, right? You make adult diapers and also baby diapers. So the lower birth rate results in a headwind for the baby diapers, but then the aging population creates a tailwind for the adult diapers. So it's kind of like interesting. So like, it's not entirely bad. It hedges itself out, which is very interesting. Um, yeah, I know. I feel like this one's a pretty good one. This one's a pretty good one that we found today. The second one we found today was Insweco Sugar Refinery. I think this one I could potentially be in the too hard pile because I don't know much about sugar. Um, I'm not seeing they're trying to create some new products, but none of which are creating more traction. The six margin expansion is due to macro, meaning they had a period where sugar prices were low, so they were able to capitalize on that and basically have more upside in terms of their sales, so better margins. Just trade relatively cheaply, but I just don't see revenue growing. It could be a value trap as 8.4 billion in long-term investments, but the question is how do they utilize it, right? And it's not obvious to me how that they can use it productively, so it's not in a A tier. Yeah, but yeah, today we found Havix, and I quite like this one. So yeah, thanks for tuning in, everybody. I will be continuing with the live streams, and up until I find 5. So today, up to today, we have found 3, so that's good progress. So thanks for tuning in, guys, and peace out.